And today I want to go over psychology. So this has been a video I have been pretty much waiting to record, but I think it's one of the most important videos that you're going to watch in this whole course, simply because trading is 90% psychology, 10% actual technicals and execution. So the reason being is trading's easy in itself, right? You're clicking a button that says either buy or sell. There's not much more to it, and you're either going to make money on it or you're not. You're going to be wrong and lose money. But trading really comes down to how disciplined you are in knowing yourself and your emotions and managing your money and your risk. So I want you guys to get it really planted in your head that trading is easy, right? Like, it's not that hard to analyze trends. It's not that hard to look for the indicators or indications of a price action telling you where it wants to go. What's hard about it is over leveraging, not knowing how much to risk or thinking you should take a lot of risk on a trade. And then it starts going against you and you do not want to accept that you're wrong. And then therefore you end up losing money on the back end and even blowing up your account. So this is the reason why when I started trading, I believe, I have been an entrepreneur pretty much since 18. I was doing sales and business, got my general contracting license, developed real estate. And entrepreneurship at its core goes against what a good trader should be like, because entrepreneurs are resilient. We hate losing. We will always figure it out. We will always try to make it work no matter what, because we're used to being rejected, right? So like in a sales call, you're used to people telling you no, but you keep on pushing them to get the sale. Trading, on the other hand, it's the market, and the market doesn't give a damn about you, doesn't give a damn about your problem, doesn't give a damn about the next bills you have to pay. The market is just simply here as a big, how do I put this into perspective? The market is simply here as a big mirror of psychology between buyers and sellers. So it's literally saying, oh, more sellers think that this should be going down and more buyers think they should be going up, whatever asset you might be trading. So psychology is really, at the end of the day, what controls your results, and it's really what's going to make or break you as a trader. So we obviously have the two key components of human psychology. We have fear and greed, right? So fear makes you exit trades early. Fear makes you hate your losses. Fear makes you sell bottoms. And fear makes you have no conviction in your thesis and your trade. On the other hand, greed does the opposite, where greed makes you overstay in trades that you should have taken profit on. Greed will ignore any plans or rules you have as a trader, and greed also leads to you blowing up your account for that same reason. So I think this ties back to, in terms of greed, is impatience, right? So when the market's not giving you anything, when you're in a no trade zone, when the trend is not clear and your setup is not there, you might be looking to force trades. You might be looking to say, hey, I have to do so-and-so so that I can pay this off, or I can go on this trip, or I can do this, or I can buy that thing. And the market might say, you know what, there's no trades here for the next 2 weeks. That's where you, as a trader, you have to come in and you have to learn not to force trades. You have to learn how to analyze your charts, analyze your market, and say, okay, there is no setup here for me. The probabilities of this not going in my favor are high. So let me take a step back and not trade. And this is something that I learned not too long ago, actually, maybe like 4 or 5 months ago, is not to overtrade. Because I used to be the type of guy that used to imagine or view any sort of setup as a potential setup, when really there was nothing and my strategy was not there, the trend was not there. And I would force a lot of these trades and end up losing thousands of dollars when it was so unnecessary. And trust me, guys, you guys will never regret not trading and missing out on a play versus comparing that to trading something that was not even there to begin with and losing out on that and losing on that play. When I started drilling this into my head, not trading became a trade. So that's what I want you guys to understand, is not having a position is a position. You do not always have to be trading in the market. You do not have to be in the market making 57 trades. You can trade, once a day, twice a day, once every other day. I like to trade personally anywhere between 4 to 6 times a week. I take bigger position sizes. At times, I do have weeks where I see multiple setups and I can, get into 10 to 12 to 14 trades in a week, but that's not very typical. It's not something I force or look for. It's only if it's there and the market conditions are there. So yeah, understanding that no trade is a trade is very key, and it'll be very key to your success in the long run. Same thing applies when it's revenge trading, right? So when you guys take a loss, you automatically think, oh shoot, my account went from 10,000 back down to 8,000. What should I do? Oh my gosh, I need to get this back up to 10,000. So your mind hates losing. So you will automatically be looking to get back into another trade so you can make up for your losses, so you can feel better about yourself. Again, this is a big mistake, and I've dealt with revenge trading myself. Once you guys understand that you need to look at trades as a series, as a long form of being rather than a short sprint, as a 25-mile run or a marathon rather than a sprint, everything changes. Somebody might sprint halfway through the marathon in front of you and you're like, yeah, that guy's gonna get burnt out, because you're going at a nice steady pace, and eventually you're gonna overtake him and beat him. So the same applies in trading, where if you take a loss, it's part of the game. And I can reflect to this in business, because in business you have marketing expenses, overhead, you have material costs, specifically in real estate and construction like I did. And these are all part of expenses that you need to operate a business. So the way I look at losses now is not from oh my gosh, my account went down to, 8K from 10K, but rather, what? I had to pay that $2,000 as my marketing expense. And now on the next 2-3 trades, I'm gonna make that back and more. So when I started looking at trading in a similar way that I looked at business, it revolutionized my psychology on revenge trading. So just remember, you guys are in this, or you guys should be taking this because you guys are all in on trading. You can't be 1 foot out, 1 foot in. You can start it off as side income, but eventually the goal is to become a full-time trader, right? Because this is the best job in the world. It's literally you versus the market. So think long term. Do not think just for tomorrow. Think for years from now. So you guys will not even think about that $2,000 loss when your account is now from 8,000 to 80,000, because you guys started stacking up wins, rather than going now, putting in a very risky trade and now going from 8,000 back down to 4,000 because you decided to risk $4,000 just trying to make it back so you can be back at 12. You know what I'm saying? So that's a big one on revenge trading that I think you guys need to think about and consider when you guys are going through your journey of trading. Beginners lose because they trade too often, they risk way too much, there's no rules, and impatience. So those 4 things are very, very key as to what you want to stay away from, especially if you're beginning. Don't ever break your rules. If you guys have a trade that goes in your favor and you guys make money on that trade, but you happen to break your rules to make that trade happen, you guys should not be happy with yourself on that. And I've had plenty of those where I made money on a trade that I broke my rule. Maybe I overtraded. Maybe I took a setup that wasn't even there. And, it's 50-50. So you're going to be right sometimes. But what about the times you're wrong and you happen to over risk? What about, that $2,000 loss? Your account went from 10K to 12K. But then the next time you do that, you're now willing to risk 4K. Now you're back at 8K. You just went from 12 to 8. So there really is no benefit in not following your rules. And once you start valuing and learning that you had a great trading day if you follow your rule, so even if you sat out for that day or for that week, whatever it might be, if you sat out, you should still be happy with yourself if you're following your rules. So if there was no setup, if you didn't feel confident and you didn't do your analysis, or you were late to the move and you sit out for that day, that's perfectly fine. That is a good trading day in my book, and you should journal that and just go over the psychology of yourself and be like, hey, you know what? I didn't make money today, nor did I lose, but I followed my rules. And vice versa. If you take a trade that ends up being a loss, but you followed your rules, you followed your risk to reward system, your setup was there, and the trade just didn't happen to turn out in your favor, that's okay. You should still be happy with that trading day because you value your rule because you know in the long run you're going to win, versus the trader that is gambling, essentially throwing longs and shorts at anything and making money for a period of time until he doesn't. So you're going to outwork that guy. You're going to out survive that person every single day, every single time. So yeah, so on to my next point is you're not going to win every single trade, right? You need to focus on the execution and the rules behind your trading, because I used to think I needed to have a high win rate of 95% plus, 90% plus, barely lose any trades. But losses are going to come. Whether you like it or not, you're going to lose a trade. Sometimes the market won't follow rules. Sometimes it'll be news that'll come out. All it takes is a Trump tweet of something bullish or bearish, good or bad, and the market rockets a certain way, maybe against you. These are things that are out of your control, but what is in your control is yourself. So following your risk, having your stop loss in place, having your take profit in place, as long as you're following those rules and what you have built for yourself as deemed as appropriate for your trading style and your trading size, then that's all that matters. That's your job. As a trader, that is 100% your job, and I can't emphasize this more than enough. So you're not going to win. You're not going to always win. And again, I had a very hard time accepting that as somebody who's been in soccer their whole life, competitively trying to go pro. I hated losing, but I got humbled. I got humbled by the markets. The markets told me it's what we decide we want to do, not what you want to do. So that'll come with experience, but please keep that at the front of your mind when you begin trading, or if you're in your trading journey right now and you're looking to improve. So another thing is detach from money, right? So this is very vital. And what I mean by this, by detaching money, is that if you feel like you need to make money, I know it sounds ironic, you're probably going to end up losing money. I know it sounds ironic and contradictive, but hear me out. The moment you start feeling like you need a trade to hit, or you need to hit a certain amount of money in your week or month, is the moment you actually start trading way better. You start trading without emotion. You start trading without any unnecessary pressure. There's already enough pressure as it is. You're already risking capital up front to try to make more capital. So why even put more psychological pressure on yourself? Ask yourself that question. Why do you feel like you need to make $1,000 today, or you need to hit the week at 5K, right? If you're trading from a place of absolute need, you're going to lose. So if you're trading your rent money, if you're trading savings that you can't afford to lose, I'm going to tell you right here, right now, go build up some more capital, go build up a bigger cushion, and then get into trading. Go demo trade for 6 months. Literally take your time, because you're in this for the long run. You're not in this to just try to learn trading in a month and then boom, in 3 months, you're already a 6-figure trader or 7-figure trader. That's not realistic. What I mean by generally building up a cushion is, now that I've been trading for over 6-7 months, and I've built enough of a cushion, I'm basically not risking capital anymore that I, one, need, and two, that is coming out of like my hard labor earned money. So the reason I say this is because a lot of people watching this probably have jobs, or they run a business or a small business, or maybe a regular sized business or a big business. I don't know, but the reason why I mean this is you start thinking in like, oh my gosh, I just lost $500. Man, that's 2-3 days of work gone. or oh my God, I have 10K in there that I wanted for a car, or I needed for a car, which is even worse. Oh my God, now it's down to 6K. I don't know if I'm going to be able to get that down payment on this car now. If you're trading with money like that, the whole game becomes very, very stacked against you. And you're going to be trading against other people like me that if we see a 2 grand loss, 3 grand loss, 5 grand loss, we're okay because we're up massively and we're trading with money that we don't necessarily need. So in my situation, to be specific, I'm pretty blessed that a lot of my money is stored away in real estate and crypto like Bitcoin. And the size that I keep in my account is a size that if I lost it all tomorrow, legit, if I lost it all tomorrow, I would be perfectly fine. So I built a system around myself that I said, okay, if I can take an account from, let's call it 50K to 100K, I then can go out and pull out, I don't know, 25K or 30K. And now my account's at 70K. And now I can build that 70K back up to 100K or 120K. Now I can pull out another 30K. Now I'm at 90K. And by doing this, I was able to build up enough cushion that a lot of my profits have been stored away. And I'm now trading with pretty much very, very minimal emotions, because emotions will always be there. We're human beings at the end of the day. Nobody wants to lose. I don't want to lose money. The next Joe Smo doesn't want to lose money. Any of the influencers you see, nobody wants to lose money, right? The whole point of the game is to make money and to win. But a loss is very different in my eyes compared to somebody that's trading with capital that they absolutely need, or their rent money. Our viewpoints on the market and our viewpoints on our positions and our trades are going to be absolutely different. I'm going to be okay accepting a loss. He won't. Or he's going to go and try to revenge trade and try to one up his loss, which I don't do. I wait patiently for my next setup because I know out of the next 4 trades, I should be winning at least 2 to 3 of them, minimum, if not more. Well, I'm kind of speaking gibberish, but out of the next 10 trades, I should be winning at least 7 to 8 of them. Let's just call it that, which I'm perfectly fine with. So yeah, losses hit different when you're trading with money. So stop needing money, detach from it. Trust me, this is game changer. Put an amount of money that you're okay seeing go to zero. Like that money does not exist anymore. And the moment you do that, and if you start off on that right foot, you'll be perfectly fine. I started off on that right foot with around $12,000 when I got into crypto trading. And that was money that I had accepted that if I lose, I lose. It wasn't money that I absolutely needed. But then I was able to run that up to 60,000 plus in the first, 3 months. Mind you, I was still not an expert trader at all, or as good as I am now. But I did ride a trend upwards and I got a little lucky. But then the moment I started taking losses, I really, really engaged in myself and said, something needs to change within you and you need to go and study psychology much more. And then from there on, now I feel very confident in my trading ability and that I can do this essentially for the rest of my life. So that's a big key point. Another thing is risk control, right? So I feel like as a trader, you need to set amounts that you're okay risking, and you should always protect your capital. So if you have a $100,000 account, you should not be in a trade that if your stop loss hits, it's going to cost you 20,000, right? Because now you just went from 100,000 to 20,000 and you're trying to make 40,000. Let's just say you went for a 2 to 1, right? So you're risking 20 to make 40. This is not, in my opinion, the way I do it, nor you should do it, because that's a big drawdown on your account. Your capital, you're now trading with 80K instead of the full 100K because you risked a lot trying to make a lot in one trade. There's always going to be more trades. You do not need to go for home runs all the time. I go for base hits personally. And so that's what I feel comfortable with. So I feel comfortable making anywhere between $2,000 to $4,000 on a trade while risking anywhere between 1.5 to 2.5 thousand. So, if you're risking something that is gonna make you stay up at night, something that's gonna change your life if you lose, then you are in the wrong position, my friend. You need to lower your risk massively, massively. So like on a $10,000 account, you should not be risking more than, I'd say, anywhere between $500 to $1,000 on a trade. The reason being as well is if you lose one trade, you're now of $1,000, you're now down to 9,000. And you now have pretty much 9 more times you can go to the bat. You can go bat at the base. So, the pitcher's gonna swing at you and you have 9 more times to try to hit a base hit and maybe even a home run or maybe a very solid hit. And if your trading strategy is making you lose 10 trades in a row, something is wrong with your technical analysis. Something is wrong with the way you're viewing the market at that point, and your strategy is completely off. You're just guessing at that point, because any trading strategy you follow should not be losing 100% out of 100%. So you guys should definitely go back to the technicals at that point and focus on that first. But for the ones that have the technicals down, they feel like their strategy works. They feel like, on most trades, they're pretty much right about the right direction, and their trade is in profit, and they're doing well. But when they lose big and bigger than what they win, or when they're winning, they don't take profits and they go back to break even or losses. This is risk management. I've had plenty of trades, for example, where if I had held past where I had set my take profit, I would have made, $20,000 on a single trade, $30,000 trades. But however, there is times where I was like, no, I'm going to try to make 5 to 10K on this trade. And the moment I'm at 5K, I go into preservation mode, where I say to myself, let me raise my stop losses so that no matter what happens, I'm going to come out of this trade profitable, no matter what happens. And that's key, because a lot of people, when they're up, they just want to see it keep on going and going and going. And then by the time they realize they're back at break even, or they're in the negative. So try not to let a green trade or a profitable trade turn, and know your risk control. So that way, when you're down, when you're in drawdown and a trade goes against you, you're not down, thousands of dollars off the rip. You're down a certain amount that you're comfortable with. You're okay losing $1,000 on a $10,000 account, or you're okay losing $500. Cool, boom. Your stop loss hits. Okay, on to the next, because I know I'm gonna win. So this is kind of to wrap everything up, as I don't want to put too much into you guys, on too much on your plate. One trade means nothing, right? So what do I mean by this? A single trade is not going to change your life. All right, straight up. You are not going to have a $1 million trade, at least not with a $10,000 account. However, you can have $1,000 trades, which gets you to that same amount, to the million. What I mean by this is, start thinking in long form, as mentioned. Go for the long run. Add up those base hits. I call them base hits because you're either trying to go for home runs or base hits. Just like in baseball, you can hit a base hit, boom, you got a player now. The other guy hits another base hit, boom, you got 2 players now. Another guy hits a base hit, boom, you got 3 players on the plates now. One more base hit, boom, now you guys just scored a point. Same concept applies in trading. Go for the base hits, go for the wins, grow that P&L, build that cushion, and you guys are going to end up winning in the long run. That's absolutely the best thing that I've ever done for my trading, was I started focusing on base hits. Because I was one of those guys that wanted those $15,000, $25,000, $20,000 wins on a $50,000 account. That's absurd. It's like trying to make, trying to go all big, all in. That's not trading. Trading is a compounding game. Your account grows, your wins start growing, your losses also start growing. However, you always keep that 2 to 1, that 3 to 1, that 4 to 1 risk to reward. And in case you guys didn't understand what risk to reward is, it just means that if I'm betting a 2 to 1, it means that I'm trying to make $200 for every $100 that I risk. A 3-to-1 would be I'm trying to make $300 for every $100 that I risk. So in case of your stop loss, if you're risking $500 on a 3-to-1, you're trying to make $1,500. The reason being why is because let's just say you risk $500 on a 3-to-1, you lose that trade, right? Then you take the next trade where you are risking a 3-to-1. Let's say you lose that trade as well. You're down $1,000 now. But let's say on the third trade, you hit, right? Like you make a great trade, your take profit hits on a 3-to-1, you just made $1,500 because you were risking $500, right? So now your $1,000 loss is wiped out and you're actually up in profit $500. So that's why I always go for at least minimum 2-to-1, 3-to-1 on my trades. On swing trades, I'll go for 3-to-1 and 4-to-1, typically because I'm just kind of letting those play out on the higher time frames. And the targets you need to be a little bit longer. And I just feel more comfortable, you know, being at a 3-to-1 or 4-to-1 on a swing trade to make it worthwhile. So yeah, so summarize everything. This is how you guys can improve. You guys need to take fewer trades. You guys need to downsize when needed be, especially if you're on drawdown and if you are down in your account. Take a step back and make your trading losses smaller and your gains smaller until you have momentum again and you're taking a lot of winning trades. Then you can start upsizing it a bit, but don't just take a loss and then, you know, absolutely risk a shit ton more than you would have, you know, normally, because trying to make that loss back, because that's just going to lead to destruction. So another thing is have a plan. You know, always have a plan before each trading day and follow your rules. Follow your rules and emphasize following your rules over trying to make money. Those are kind of like my key takeaways for you guys to become profitable traders and to absolutely kill it in any market you guys use. So yeah, discipline over emotions. Being calm beats being smart. Knowing yourself and your intuition, being disciplined within yourself is going to allow you to win in the external. And the same applies to life, just like anything in life. And then, yeah, so it's your mind over the market, and always remember that. So with that being said, guys, that's what I have for you guys today. We can go over specific topics in this video and future videos, as these can have their own segments. So much love to you guys. I wish you guys all the best in your trading journey. And yeah, Dell Trades out.